named my portfolio the Lukatuk Fund in honor of the nickname I've been given by Mr. Gurney. And I did a little background research just for fun to find out where Lukatuk comes from. And it's actually an artist in San Francisco who makes little tchotchkes for antsy tourists to take home and show people. But I digress. The stocks I invested in were Tesla Motors, GameStop, Visa, Celgene, and Exxon-Mobil. And the first stock I'm going to talk to you about is GameStop. GameStop originated in Dallas, Texas as a company named Babbage's in 1996, the year many of us were born. They have currently 6,602 companies in 15 different countries around the world. They are a seller of new and used hardware and software products, and they rank 273 of the Fortune 500 companies. I bought GameStop because it is in a cyclical industry, and I felt like we were entering an expansionary period of the business cycle, so I thought that that would be a good time to invest. GameStop has also been a very good growth stock, which means that over the past year, it's been experiencing nothing but positive growth, and I felt like that would only continue. It sells inferior and superior goods, so either way, whether or not my prediction was correct, GameStop would not be hurt or helped too much. And for those, just to reiterate, an inferior good is a good that increases in demand as income decreases. So the used games they sell, for example, would become more popular as GDP decreases. And that is one reason. And the superior goods part of it is that as it's actually the inverse, it's as income increases, these goods are in more demand, like sports cars. So I figured that the new consoles that were being released would be a good example of superior goods that they sell. All right, taking a look at the performance, unfortunately, it dipped. This was as a result, majorly, of their quarterly report in the third quarter. They had a massive drop-off in profits because, as the CEO actually said in a statement, the $300 million they made in earnings was invested in new hardware and software, such as the new consoles they were releasing. And although this is good for the company on average, and in the future they will experience more growth, it hurt them in the short term. So as you can see, it was kind of set up to fail, and unfortunately I just missed the cutoff for what would have been a good time to sell. The next stock I invested in was Exxon-Mobil stock. And Exxon-Mobil is a direct descendant of Rockefeller's Standard Oil. The companies actually broke up and then merged. It produces approximately 4 million barrels of oil a day. The Exxon-Mobil company is split up into 4 divisions: upstream, downstream, natural gas and power marketing, and the chemical division. Upstream and downstream are mostly for refining and transporting oil. The chemical section of the company is for petroleum products such as plastics and using petroleum to form different compounds. And the natural gas and power marketing sector is for creating new reusable energy, which seems to be the trend nowadays with the green movement. I bought Exxon-Mobil because it's a blue chip company and I wanted a diverse but safe portfolio. And the unrest in the Middle East, mainly Syria with the chemical weapons threats, I felt like that would cause some tension in the Middle East and would make oil more difficult to transport, which would cause an increase in the price of oil and therefore better earnings for Exxon-Mobil. Unfortunately, that was not the case. However, Exxon-Mobil did still increase. I bought 173 shares of Exxon-Mobil and at $87.06, and I sold them and I earned a profit of $1,110.66. As you can see here, in early October there was a dip, partially because of the government shutdown and also some of the news saying we weren't going to go into Syria, and the demand for oil actually dropped, which caused, which caused the prices to drop, contrary to what many people were thinking. So that's the reason for that temporary lull, but as you can see in early November they experienced growth, in part because Warren Buffett took a huge stake in the company, and also PetroChina invested a 25% stake in their Kurna oil fields, and that gave consumers a lot of confidence to invest in the stock and showed that it would still be experiencing positive growth. The next company I invested in, as many of us did, was Tesla, and I can see your smug grin, Neil. Tesla was founded in 2003. It is a vendor of electric cars and electric powertrain components. For those of you who don't know what that means, they sell both the cars and the parts to the cars, like their lithium-ion batteries, to other companies for use. The Roadster was the first car that they sold. It was a fully electric sports car, and to this date they have sold over 2,400 models worldwide. And the Model S was the luxury sedan that they put out, and they have sold 13,000 plus models to this date. I purchased the stock because I figured it was a good cyclical stock to invest in. In the expansionary period, they're going to do a lot of investment in research and development, and I thought this would be positive growth for them. It was a little bit of a momentum trading move for me because I saw that lots of people were getting on the bandwagon of Tesla and they were doing very well. So although the stock was a little overevaluated, I felt, I still thought that there was room for growth. And it was also kind of a moral move for me, hopping on with the green movement, because who doesn't want to save the earth? So my performance over the 3 months was bad, but not as bad as many other portfolios, because I only invested approximately $15,000 in Tesla, a total of 82 shares, which I bought at $185.65. The obvious reason for the drop in stock was the fires that they reported in the lithium-ion battery. So as you can see, the stock kind of burned out along with the batteries. It was a little overheated, to continue the puns up here. Unfortunately, it did really badly for me, but in the future, I only see positive growth for them. Now that they've kind of dropped their overvaluation stigma that they have on them, I see nothing but good news. Celgene was the next company I invested in. It is a biotech pharmaceuticals company. They were founded in 1986 by Dr. David Sterling and Dr. Saul Barer. They went public in the year after, in 1987, and they are most known for their 3 drugs, Thalmoid, which has the active ingredient thalidomide, which is a treatment for people who have potential to be myelodysplastic. Their drug Revlimid, which has the active ingredient lenalidomide, which is a drug for people with multiple myeloma, and Focalin. And I'm not even going to try to pronounce that, but it treats ADHD. And for those of you who don't know, myeloma is a malignant bone marrow tumor. So it's very revolutionary stuff they were doing. I had faith especially in Celgene because the biotech industry was booming, so I saw no reason not to look there. It's a cyclical stock. In the expansionary period, they're going to do very well, a lot of research and development. And my uncle actually works in the biotech industry, and I asked him, of these stocks, which one do you have the most faith in? And he pointed to Celgene. He said that he had news of a partnership coming up and some new drugs that were coming out. So he pointed me in this direction. And I'm very thankful for that because I earned $1,526 from this. As you can see, in early October, there was a little bit of a dip because the debt ceiling news was coming up. And many people were fearful for the biotech industry on average, because if the debt ceiling was capped off, there would be no room for increased investment in creating new pharmaceuticals. Also, there was a problem with one of their drugs in Europe, and people speculated that it might not make it through the European Union's meeting on accepting new drugs in the following month. Clearly, they went up at the end in about mid-November because their drugs actually did pass the EU Drug Union's meeting, and they expected sales of Revlimid in Europe in the coming future, and so that was great news for them. Also, they did end up partnering with a company named Abraxis, and they created a drug named Abraxane, which treats metastatic breast cancer. So there was a lot of positive news for that, and that's why I did so well with this company. Visa is a blue chip company that I invested in. They were founded in Fresno, California in 1958, originally as the Bank Americard. They went public on February of 2008, and in 2008 they had 38% of the market share for credit and debit, and they had 60.7% of the debit market share in the United States. Huge numbers, which is why I chose Visa. In 2009, they had $62 billion in transactions, and they were ranked number 260 of the Fortune 500 recently, up from their previous rank of 281. They are a blue chip company, as I previously mentioned, which was one of the reasons I invested in them. And another reason was the historically low federal funds rate. I felt that due to the low interest, or the low funds rate, which was about 0.25%, or 0.25, due to the low funds rate, there would be low interest rates. This would cause people to invest. The economy's on the rise. It was a great time for a credit company, and Visa was the company I chose to be my representative. Overall, Visa had great performance. Obviously, in October, it was hurt by the government shenanigans, the shutdown and the debt ceiling, so it dipped there, but it got back up and continued to grow. Consumer confidence kind of came back when the government extended their debt ceiling, and that caused more spending, obviously, and this resulted in great news for Visa. Overall, I went negative. I had a net loss of $3,418.57. My portfolio was relatively volatile. As you can see, there's a lot of spikes and dips, especially in the month of October. Many of my stocks were hurt severely by the government shutdown and the debt ceiling news, crisis, whatever you want to call it. So, but it did come back up, and then GameStop and Tesla dragged it down. So it did not perform to my expectations. The relative performance chart I have chosen here represents my portfolio with the Dow Jones, the S&P 500, and the NASDAQ. And as you can see, my portfolio seemed to keep in line with all of them, if not peaking above them at certain points. However, in the end, Tesla and GameStop brought it down too much, and I went negative. So thank you for your time.
All right, questions for Luke? Tom?
Mr. Levine.
You said your uncle provided news about Celgene. Do you think that can be considered insider trading?
I think that insider trading is a strong word, but maybe a little bit. Mr. Garney?
Luke, I noticed that Tesla, since we sold, is up $23 a share to $150.
Yes.
You sold it at $127.
Yes.
What do you think is going to happen with Tesla in the next 5 years?
I think that it's going to steady out temporarily because, as we previously mentioned, their old market cap was way too high. It was very overvaluated. So I think temporarily they're going to steady out, but after they finally get returns on investment and make profits and set up all their recharging centers, that they're going to experience growth. So towards the end of 5 years, I see positive news and growth, but temporarily I think it's going to stay pretty level.
Do you think, since society is so reliant on online shopping now, that's going to hurt GameStop in the future?
GameStop actually made some major pushes to switch to the software market. So I know that they created a new software interface for customers to buy stuff online. I know that they have an online PC game structure. I do think that with Amazon and all those companies rising and Best Buy, it's not really as important where they shop because they can find anything they want online. But for those people who want to go into a store and hear news from someone, I still think that GameStop is one of the most reliable companies for that. And they are one of the only companies that sell and take used games. So although I think that that may hurt their growth in terms of how much they grow, I still think that there will be growth, even if it's smaller.
All right, well, let's have a nice round of applause.